Market crashes are inevitable, and while some traders panic, the prepared see crashes as opportunities. So in this video, I will share the bear market trading strategies that generate profits while the markets are bleeding red. But alright, so in order to make money in bear markets, the very first thing we need to do is, of course, to understand what a bear market is. And in very simple terms, a bear market is commonly defined as a period when a broad market index, for example, the S&P 500, falls 20% or more from its recent peak. And as we can see, if we jump into TradingView here, we can see that currently the S&P 500 is down around 10% since its peak. However, if you look at crypto, the story is a bit different. As we can see, Bitcoin has fallen more than 20% from the peak. So if we define a bear market as being down 20% from the peak, crypto is actually already in a bear market. But for me, I actually define bear market a bit different when it comes to crypto and when it comes to stocks. And I will talk more about that later. But for now, let's just notice that the stock market is not really in a confirmed bear market yet. And that makes it even more important to actually, watch this video and prepare so you are prepared before the bear market happens. And another important thing to mention here is that bear markets often happen together with other kinds of economic weakness as well. So you can look at things like, inflation, CPI. You can look at things like, employment and other macroeconomic factors. But now then, what are some very important characteristics of bear markets? Well, the first one is duration. And the duration of bear markets, of course, vary here, but the average tend to be around, 10 months or 9.6 months. And one important thing here is that they tend to be much shorter than the average bull market. And a bull market is basically a rising market. If you want to dive even deeper into bull markets and bear markets, I do have a video about that, and I will make sure to link it in the video card and the description. But that is the first thing. Another characteristic here is frequency. And it's important to notice that bear markets are very normal. They are a normal part of market cycles, and they occur roughly every 3 to 4 years. The next key thing here is, what is the average decline when it comes to bear markets? Well, for stocks, they typically tend to lose around 36% on average. When it comes to, for example, crypto, these bear markets tend to be much more aggressive. And that is why, when we talked about the definition of falling more than 20%, that is why in my opinion, a crypto market has to fall even more in order to, be a real bear market. Actually, in crypto bull markets, many times we see drops of 20 to 30%. Last but definitely not least here, opportunity. While bear markets, it's totally understandable. Bear markets are scary for many investors and traders, but they can also be the best opportunities. It doesn't really matter if you are trading or investing. Bear markets can be amazing opportunities. When everyone is, fearful, that is the time to be greedy. That is one of these classic Warren Buffett quotes. So here, this is an important mindset and takeaway. Historically, markets always recover eventually. It can take a long time. For example, during the depression, it took a long time for the market to recover. During the bear market in COVID, we recovered very, very fast. So it can depend. But historically, we have always recovered. And another thing is that long-term gains in the following bull market tend to be much larger than the losses during the bear market. So there are definitely opportunity here to make a profit. But alright, so now let's take a look at the best bear market trading strategies. And let's begin here by taking a look at some short-term trading strategies here for bear markets. And I think this is the reason many of you guys even clicked on the video. So let's dive in here. But first, Bear markets are volatile. This is a very important concept, and if you want to learn more about volatility, I do have a video about that, and I will make sure to link that video both up in the video card and the description. But traders can use specific tactics or specific trading strategies to actually make a profit from these downwards movements. But these trading strategies do require careful risk management. And the first trading strategy I want to show you guys is something called bearish chart patterns. One of my favorite chart pattern is called a bear flag, and I will take a look at the bear flag trading strategy step by step. But we do have other trading strategies like descending triangles, and what all of these chart patterns can do is that they can basically give you a framework for when to enter, where to exit, and where to set your stop loss in order to make money from falling markets. But all right, so now let's jump back into TradingView here. And right now we're looking at the Nasdaq 100. This is one of the largest stock market indices in the world, containing many tech stocks. But now the first trading strategy I want to show you guys is a trading strategy called the bear flag strategy. And what is this? Well, in order to identify a bear flag, what we're looking out for is, first of all, we need to see something called a strong impulsive move towards the downside. And very interestingly, if we look at Nasdaq recently, you can see that this right here is exactly what we're looking out for. We're looking out for this kind of impulsive move towards the downside. And you can see that it took out the previous lows. What we then look out for is a pullback. That is a move in the opposite direction of the impulsive move. And here you can actually see that recently Nasdaq has been making this pullback, and the goal here of the bear flag is to continue the trend towards the downside. So as we can see right here, Nasdaq has just recently actually printed a bearish flag. So now let's take a look at how do we trade the bear flag. Well, there are a few different methods to entry here. The first method is to try to enter somewhere around the top of the flag. This can be a bit hard, but you can actually combine it with price action. So price action are different. It's basically the study of how the price moves. And here you can see that this white candle together with the gray candle creates something called a bearish engulfing pattern. That is a bearish price action signal indicating a move towards the downside. So the first entry point, the first potential entry point for this bear flag, I would say, is right here. If you enter at this point, I would set the stop loss here is pretty clearly defined. You usually want to set the stop loss just above the pattern. And as for the target, you can usually aim for a target like a 2-to-1 risk to reward or 1.5. So how this trade looks in action, you go up here to the forecasting tools, you choose your short position. We will talk more about shorting soon, but you choose your short position, you set your stop loss just above the high, and if you use a target here, if you use a 2-to-1 risk to reward, you can see that this pattern has not reached the profit target yet, but we are getting very close here to the profit target. Another way to trade this pattern, this one is much more or sort of longer term, is to enter, let me show you guys, you enter the short position at the breakout. So this is the candle that closes, you can see this pattern closes far below the defined support of the pullback, right? So you can enter at the breakout, and if in this case we use a 2-to-1, wait, let me set the stop loss first. We set the stop loss above the high of the pattern. Using a 2-to-1 risk to reward, our target will be all the way down here. But here, in order to improve your risk to reward ratios, I always recommend to use market structure. So you look back at the historic price. By the way, if you want to learn more about market structure, I do have a full market structure course. So I do highly recommend to check that one out after this video. But if you look here, you can see we look back, we can see that this sort of area right here has been very significant. It acted as resistance, support, support, support. So in this case, I would actually set the target above this area because it is likely that we will see demand coming in. So you can, for example, adjust the risk to reward here to a 1.5 risk to reward. That is yet another common method. But all right, so now let's take a look at the other trading strategies. The next thing I want to talk about is short selling. And this is not really a trading strategy, but this is basically the principle of that we use when we, for example, trade bearish chart patterns. Short selling basically involves borrowing share, selling them, and hoping to buy back the stocks later on. If you don't, in this video, we don't really have time to dive deep into how short selling works, but I do have a very short video on how that works. So if you want to check that one out to learn, if you want to learn, how short selling really works. Another strategy here is to use something called inverse ETFs. And these ETFs are basically funds designed to go up when the market goes down. So if you're not comfortable trading on your own, you can simply buy an ETF instead. And luckily, when it comes to ETF, I do have a video about that. And in that video, I will also reveal my top 5 ETFs for 2025, including one inverse ETF. So definitely, guys, check that video out. Last but definitely not least, guys, when it comes to trading in bear markets, risk management is very, very important. And yes, guys, I do have a video about risk management. If you are gonna trade in bear markets, make sure to watch that video. I can't stress enough how important risk management is. And now, if you are more of a long-term investor, you might be curious in what are the best long-term trading strategies for bear markets. Well, here we have a few. One thing we have is called dollar cost averaging. And this is something I talked about in my most recent video about compound interest. So this is a very, very powerful trading strategy if you are patient and are able to, not panic when things go down. Dollar cost averaging is amazing. Some other trading strategies is to focus on defensive stocks, flight to safety, and rebalancing. But this video is getting pretty long. I do have more things I want to talk about, but I think I will keep this for our channel members. If you didn't know, we do have a amazing community here on YouTube, and by joining the community you will get access to multiple tools, exclusive videos, and other things. For example, yesterday I released this compound interest calculator that you can, for example, use to calculate your dollar cost averaging that we talked about in this video. And I also plan to release today's presentation for all channel members. So if you want to get extra tools and at the same time support the channel, please consider joining the membership today. I look forward to see you guys over there. And now, when you are ready to continue your trading journey, I highly recommend to check out my full trading courses right here on YouTube. They are completely free, and simply just click or tap on the screen and you will get access to them right now.